Welcome to Money Matters with Greg, where we dive into the money conversations shaping your life. From investments to estate planning, insurance to taxes, we cover it all with a fresh perspective. Join Greg and his guests each week to get inspired and take control of your financial future. Let's get started. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.
Good afternoon. The show's Money Matters with Greg. I'm Greg Farrell, CEO and president and owner of FINRA Wealth. It's a wealth management firm here locally in Valparaiso, Indiana. We're broadcasting today on WVLP 103.1 FM here locally. And then also anywhere you pod. You can find us on Spotify, Apple, wherever you certainly pod. We'd love to have you. You can follow us on all of our socials at Money Matters with Greg. And then the wealth management firm is at FINRA Wealth. We also started a wealth management firm that's catering just towards college athletes. And that's FINRA Wealth NIL. So check that out when you get a chance. We're actively looking at helping a number of different athletes out there try to add some financial literacy and try to help them out as much as we can. We certainly have an affinity for our college athletes, having been one myself and knowing that I was stone cold broke in college. It's really, really nice to be able to help some people that actually have some money and being able to kind of manage it and have it for their lifetime after sports and after the game ends. We're going to talk today. This is episode number 181. Can't believe it. It's flown, but we're going to try to add some things about the market. I really feel like I need to be able to make sure everybody's up to date on what's been going on. Last week, we did a nice episode on the Trump accounts. I hope you were able to use the Form 4547 for your newly born child in 2025 or grandchild. And then, of course, that's available in 26, 27, and 28 as well as that $3,000 that the government's giving you, which is quite a gem. I have 3 kids. I would have loved $3,000 over their lifetimes, plus the $250 of Michael Dell and his estate's money that they're donating as well. So it's a wonderful opportunity for you out there, and I certainly hope you took advantage. Today is tax day. It is April 15th. So happy tax day. I hope you got your taxes in. If you didn't, you filed your extension and you moved on as far as that goes, as far as getting the money in and whatever you need to do in regards to taxes. I certainly hope you have good counsel and you've been obviously going through any software, but then of course any accountants and making sure you're all set. I wanted to talk the market today. Again, broadcasting here on WVLP 103.1 FM. Always thankful to be a part of that family and highly recommend you listen in when you can at TuneIn Radio. If you just search 103.1, you can listen anywhere around the world or WVLP.org on the website as well. There's many great shows there. I highly recommend you try out some of the shows, some blues to heavy metal, to you name it, jazz, some great talk shows. And always great to be a part of that family. So very thankful for that opportunity. And here we go. Want to talk about stocks. So, wow. All right. We are officially up 7 days in a row since the ceasefire conversations and since the post-ceasefire rally continued. It's really sort of being a lasting peace deal here, between the countries. For now, it's really been seen sort of inflation data that came in was also lower than feared. And really the strong start, I've been talking about this in previous episodes, Q1 earnings season has really added to this broad market tailwind behind stocks. S&P approached a record of highs, closed just shy of a gain of 1.18% which is Tuesday. and they gapped higher on the open on Tuesday after Vice President J.D. Vance noted a lot of progress, quote unquote, had been made in peace negotiations with Iran since they failed initial talks over the last weekend. So that was obviously volatile. Look, again, we're up 7 days in a row, and we're certainly looking like we are starting to put things behind us in regards to the overall market. As far as the war goes, we'll see. But those comments from Vice President Vance certainly added to the geopolitical appearance that we're getting things unwound, and that is apparent in the fact that the S&P 500 is back to where it started, for the most part, from where the war began. We've rallied back. Oil's down another 7% yesterday, so that's really good. That did hold support at $88 to $90 a barrel, so we'll see how that all goes in regards to that. But fundamentally, the ship traffic is being picked up through the strait, and the government's reaffirming that their intent to exclusively prevent ships that from navigating in and out of Iranian waters and totally blocking the strait. It's really kind of combined with this sort of right direction of global logistics. There's a number of ships that have been sent empty to America and Venezuela, over 112 ships. I checked shipping traffic just the other day, and it was amazing how much it changed in just 4 or 5 days, how many oil tankers could now be seen through GPS near South America and near Texas, and on their way in and out of the Gulf. So amazing to see, quite honestly, as far as these developments really sort of been, basically pushing things towards positivity. And that's really good for the market. The market typically, I just had this conversation with our interns that we have. We have 4 interns currently, and we had a meeting yesterday. The market's going to dictate and show you where it's going, where the economy is going, where things are going ahead of time. It's very forward thinking, and it will be 6 to 8 months in advance ahead of you. So you really want to be able to make sure that you're paying attention to these trends, as I always talk about, but also just the news, and just pay attention to the real news and not just the emotional news. So developments like this, ceasefire talks, oil going down, 10-year looks like it wants to crack, but it's not started yet. We'll see about that. That's actually been a little bit of a headwind. I'll mention something about that later. But that psychological mark in oil barrels at $90 is really that sort of near-term resistance. We'll kind of see what happens with that as far as where it goes. I think gold, caught a bid alongside bonds yesterday. I think that was interesting to see because gold's obviously been off for a number of days. But that was really more so pretty solid overall as far as seeing what's happening with that. You had, in addition to some of these things, back to the earnings, J.P. Morgan had really solid results. You had sizable earnings and revenues from Citigroup, served to more than, basically talk about their downbeat quarter results. Outside of banking, Johnson & Johnson topped earnings, and the leadership really raised their forward guidance, which is really nice and very positive. It's showing that there is a health in the U.S. consumer, which is solid. And, stocks really rallied over the course of yesterday. They came in solid. They were up. Futures were up over the weekend. And, we continued to push through here that, we'll see. I mean, we're dealing with, on the Iran side, we're dealing with a country that lies a lot and doesn't follow through. So they've had 47 years of lies and awfulness behind them. So we'll see where this goes in regards to those conversations and those, we have to trust that the talks will be done. And I think the S&P has fully round-tripped the entire decline and closed above the closing level of February 27th, the day before the war started. So while we're really happy the stocks have rebounded, this furious 10-day rally has really not been confirmed by other asset classes and I really am concerned still about Treasury yields and oil prices, that we just don't think that we don't have confirmation there from those two asset classes that things are going to push through. Now, we get news of a ceasefire, you're going to see oil drop $10 a barrel, and you're going to see the 10-year drop below 4, ultimately, which is really positive for a number of things, including credit card debt, mortgages, and they don't necessarily change it at overnight, but it certainly helps. So this sort of push kind of shows that the higher oil prices just aren't a big enough problem to constrict the consumer spending and really hurt economic growth. The Fed's going to be looking past rising inflation metrics as really sort of a temporary cut. Later this year, you're going to get a new Fed chief here. So May 15th is his last day. Thank goodness. Very happy about that. And we find someone else new, whomever that is. Whether they get approved or not, we'll see here in the future. But those are all trending moves towards a higher market and trending moves towards a healthy market, with the ability that now we have stability in the oil passages pretty much all over the world, as we are a national exporter and we have the oil. So why not sell it? And then the threat of having a nuclear war break out in the Middle East or even in Europe is terminated. So that is a very peaceful thing for the markets. Now the Middle East can repair itself and get back to business that once was. People forget about the regime in 2010 and how open it was in Iran to have westernized Western society come in and invest. There were Starbucks and Victoria's Secrets and a number of different stores and shops in and around Iran, and that all went away in 2013 when the new regime came in. So these are things that history and people are not talking about, and there is going to be investment in Iran that's going to be immense and incredible in the next 2 to 5 years, maybe even earlier. We'll see. But just want to be able to make sure that you mentioned. So yes, very positive on a lot of fronts, seeing a lot of positivity on a lot of fronts. Back to your disciplines and making sure that you have the disciplines and you're ready, you've sharpened your pencil, you're ready to launch in regards to some of the stocks. There's still some stocks. They haven't returned to the levels of February 27th or even higher in January. But on February 27th, the 10-year yield closed at 3.95. Now that's 30 basis points lower than yesterday's close of 4.25. So that's why I'm worried about the 10-year right now, because the 10-year is not telling you it's over yet. The market is, and the market's going to continue to do that, but the 10-year is not there yet. On February 27th, before all this started, crude closed at 67.02. That means that crude is 37% higher today than it was before the war. And on February 27th, the 2-year Treasury yield, which is the market's really proxy for expected Fed funds, closed at 3.38. And that's 37 basis points below the yesterday's close at 3.75. So, okay, simply put, so far, the price of oil and Treasury yields are really telling you they're not confirming the very optimistic views of stocks and reflecting via this recent rally. Now, first, the 300 basis point rise in the 10-year yield reflects some rising inflation concerns for sure, because it's certainly not factoring in the acceleration of economic growth, given higher oil prices and plunging consumer sentiment confidence that's fallen. But second, oil prices are not signaling any impending end of the conflict. If they were, they'd be $70 a barrel. They're off their highs for sure, but we're still talking about nearly a 40% rally in the last few 6 weeks. And if they were that confident, like I said, they'd be in the 70s or 80s for sure. And if we look at the 10-year Treasury yield, it's still 40 basis points above pre-war levels. Look, any of these three are not perfect. And they're not automatically, does that automatically mean the stocks are wrong with their rallying and whatnot? Because like I said about any news, all three of these would be fixed real quick. They'll come right back to where they were February 27th, if not lower. So it's improved over the last 10 days. It's improved over the last 7 days as far as being up 7 days in a row. That's really positive. Another thing is we've never really had three April lows in a row for the month. So it's the last 2 years we've been down in April. This April we're currently down to unchanged. So we'll see what happens with that as far as confirming this stock rally. I really don't think it's enough to give investors pause, but it's something to watch, and that's why I want to be able to mention it on the show. Watching oil prices, watching the 10-year, watching the 2-year. For that macro outlook that just hasn't improved as much as this rally implies. Want to make sure you're not vulnerable to an air pocket along the way. But that being said, things look really good. Trying to be down the middle in the middle of the road here as far as giving you advice or helping you make a decision and where things are going. We're seeing a lot of positivity. There are a couple things I think you need to watch, and that's why I mentioned what I mentioned. I hope that helps with the update on the market. Again, this show's Money Matters with Greg. I'm Greg Farrell, CEO and owner of Farrell Wealth. It's a wealth management firm in Valparaiso, Indiana, helping clients in 25 states now. We just got a new client in Idaho, of all places, which really, really enjoy. Can't wait to go visit them, stand in the stream, and maybe do some fly fishing when I'm out there because you all know I love to fly fish. So very excited to be able to maybe get out there sometime this summer and stand in a river, and I'll let you know how that goes. The one thing I wanted to mention today, too, is I did mention it's tax day. I think people are going to be surprised at how much of a tax refund they're going to get based on the OB3, the One Big Beautiful Bill. I think that has been very positive for a number of Americans, and a number of low-income to middle-class Americans that are going to be a little surprised. So hopefully that's a help to them in their pocketbook for sure. We will see how that goes overall as far as what we hear. I'll let you know. But so far, the reports, and as far as from the Department of Treasury, are very positive that the bill is working and helping Americans get some of the money back that they normally would have sent to Washington. And I'm a big fan of not sending as much money as possible to Washington. Look, all for paying taxes, understand paying taxes, but if there's a way to be able to make sure you're smart about it and you educate yourself and you can minimize those taxes in other ways and do other things that are much more aligned with your philosophies and your ideas and your investments, why wouldn't you do that rather than give the money to somebody else to be able to manage it somewhere else in regards to where those tax dollars go? So if you don't like that and you want to be able to minimize that and maybe help a local charity out, here's local. There are ways to be able to minimize your taxes. I'm not an accountant, don't play one on TV, and never will. But I highly recommend you talk to your tax attorneys, tax accountants, and then your attorneys as well as your financial advisors and your entire team to talk about how you can minimize your taxes overall. I think it's super appropriate to be able to bring this up today here on April 15, 2026. As we go forward to broadcast this show. WVLP 103.1 FM on Thursdays at 1 o'clock, then replayed again on Saturdays. Hope you can tune in on TuneIn Radio and also WVLP.org. And then, of course, anywhere you pod is our YouTube channel as well. Any of our socials at Fair Wealth, and Apple, Spotify, you name it, will be out there soon enough. In the meantime, it's a painful day for many. April 15th, it's not the most positive day having to write checks out there, but I hope you were able to file. I hope you're able to get your stuff done and get your tax returns in, and ultimately maybe get a refund. Who knows? So I want to thank you for being on, listening in on the show today. We'll be broadcasting next week as well. And I want to thank everybody out there, and we'll catch you next week. See ya.
Thanks for tuning in to Money Matters with Greg. We hope you gained some valuable insights today. Remember, your financial journey is personal, but you don't have to go it alone. If you enjoyed the show, be sure to subscribe and share. Until next time, here's to making your money work for you. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.